Hi, welcome to the Market Alert for Wednesday, the 20th of August 2025. So Nvidia cracks, AI smacked, tech attacked, tech volatility spiking, then the gap between the VVXN and versus the VIX is widening fast. The VVXN is a Nasdaq volatility from the CBOE exchange, options exchange that is. The most major indices finished lower amid tech selling, according to this headline. And finally, stocks hit and bonds bid in risk-off trade. And economic news today, well, it's a central bankers one. Apart from UK inflation, which is set to rise, it's never stopped rising. ECB, Lagarde, Waller, and FOMC meeting minutes. As I said before, this is not the important one. That's next month, September, when there will be a rate cut. It's just a matter of how much that rate cut will be, unless, of course, other things happen in between. But that's what the forecast and prediction is for next month's FOMC meeting minutes. So let's have a look at these lackluster markets. As I warned yesterday, difficult week this week. What with the so-called peace deals and ceasefire agreement, which is come to naught so far. So let's have a look at the Dow and work our way through as we normally do. So yesterday we can see this weakness, the market sideways to lower. What's also important, I'll mark this up and then I'll just make the chart a bit bigger, is you'll see a way of measuring the momentum when you get an all-time high is to come off the top down to the low and then project back, and you'll see the market stopping yesterday at the 89% for the Dow, and that's usually indicative of a market that wants to pull back, which lost its momentum to the upside, and you can see exactly that loss of momentum there. In the 30-minute chart, the market spiking up, and then that was it, sold off, and that's the way it's continued overnight. Expect the low to be retested in this market during today. And in the German DAX, we've got a situation too where the market is just stuck in a sideways range and not doing a lot. So a bit of demand for yesterday, but overnight price is sideways to lower as well. This meeting on Friday of last week with Putin and then on Monday with Zelensky and co is creating uncertainty, particularly the fact that there's not much of an outcome from what's took place. So the DAX back at yesterday's low overnight, but yesterday moving down, then back up, and then stuck in a sideways range, which was the beginning of the afternoon session, which was just a horror show, which we'll look at later in the alert. This is why I warned yesterday that we're in the final throes of the summer holes as well, and also all of this unpredictability and uncertainty that we've got around at the moment. In the S&P 100, we haven't got a pullback as yet. The market just moving down, so there's no 89% retracement. However, from this low to this high, you can see prices pulling back towards the 38% retracement, which ties in with the 20-bar moving average, a very important level for this market. 30-minute chart, it's already below the low, but as it said in the headlines about Nvidia, if we just go back, you'll see there Nvidia cracks, which is part of the S&P 500. You can see the impact of this on the S&P there as prices move lower, and overnight same thing there as well, down to the S1 going straight through the low. So in the FT, obviously treading water as well, waiting for these inflation numbers. Not good news for Rachel if they come out at the 3.7 forecast number. At the moment, that becomes an actual number. The RPI is always more of an interesting one, actually. This is sort of hidden now, but let's just go and have a look at what the I say hidden, it's actually been changed to a low impact news item. But if you have a look at the RPI, you'll see that this is a far better graph than the actual CPI. The retail price index is ignored by the mainstream media and the markets because it runs a lot hotter. So again, just something to keep in mind there. So yeah, Rachel's obviously going to be hoping and praying. It's not going to help the 50 billion black hole, as it were. It gets worse by the day, and it will continue to get worse by the day as well. But at the moment, the FT100 stuck in the sideways range, as you can see overnight. The good news is it's way off the low, unlike the DAX, S&P and the Dow. So in the US dollar, moving back to the upside, no surprise there really, because if there is any sign of any deal, the dollar is going to strengthen, so no surprise there. But of course, it's had a bit of an impact on the metals yesterday, so let's take a look at those. And kicking off with silver, well, as I've mentioned before, any opportunity is seized by the riggers to move the market lower, and that's exactly what happened yesterday. Down to the 62% retracement, a crucial area here both for the golden ratio, as it's called, and also the 50 EMA. This needs to close back above this. If not, we're heading all the way back down to 36.50, which will be this low. In the 30-minute for yesterday, they couldn't help themselves, could they? LBMA lunchtime smackdown, and now we're currently below yesterday's low as well. There is a chance that we could get a bit of a bounce off this. However, gold doing a lot better. So we're back to that situation where gold lending support to the geopolitical situation, whereas silver is not. So gold sideways, but still red at the moment, and very much oversold there as well. 30-minute chart down at the low, coming off that, whereas silver hasn't come off the low. So let's have a look at the gold-silver ratio. As you can see yesterday at lunchtime, LBMA smacked down. Central banks are buying more gold than they've ever done in history. So again, let's just have a look at that gold-silver ratio. And no surprise, it's moving back up. I expect it to go back above 90. It's 89.26 at the moment, and the more they continue to pound silver, the more you will see this number move to the upside. Right, let's have a quick look at yesterday's trades. So yesterday the market spiked to the upside. We had a sell signal. The market then moved lower, and that was the one and only trade for the morning session. Again, uncertainty, as you can see there, the market just stuck in a sideways range. We had a potential buy signal which wasn't filled, and then the market moving back to the downside. But the real mess came in the afternoon when the market waited for the Dow to open, and prices moved in a very, very tight range. And of course, there was always the expectation, which I mentioned in yesterday morning's alert, about any sort of announcement coming from the US with regard to so-called ceasefire and peace talks, which didn't materialize. So the market's sideways. Started off with a scalp trade, and then it just got progressively worse. As you can see there, the market just stuck in a range, and then moving back to the upside in a moment. And to make matters worse, some news came out of nowhere, and the market gapped higher, which you can see there, and then reversed off that. So you can see this sideways range. Horrible price action, which again was not unexpected, to be honest. As I say, I did mention in yesterday's market alert, and the same again today. I'll warn that the so-called Russia-Ukraine deal is not settled yet. May be complete and utter waste of time, and it may be a case that Russia just continue and ignore it all, or they've certainly pulled Trump's trousers down, that's for certain. But the market then proceeded to go sideways to lower after it did break, which you can see there. Okay, let's have a quick look, see where we are overnight. And price is managing to come off the low as far as the German DAX is concerned at the moment, heading back to the upside there. So not a lot to report. Again, heading into the bank holiday weekend in the UK as well. Always a difficult week in the markets in the run-up to this as well. Right, that's it for this one. Let's see how things pan out today with the central bankers being out, and also those inflation numbers for the UK. Have a good day, and as ever, thanks for watching. See you in the next one.